Welcome back to another episode of Slow Nickel Fast Dime Investing. And I got a couple of things that I want to discuss with you today. Investing in the stock market with covered calls, cash secured puts for weekly or monthly income. Whatever you desire, you select the stocks. Now, by doing this, we're going to go to finviz.com. And what finviz.com is going to be a stock screener. And if you remember on some of the other videos, I gave you exactly what you needed to run the cover call option strategy with. The PE ratios, the price to book ratios, the price to earnings ratios, the dividend ratios. I gave you all that in some of the former videos. So just go back and watch some of those. But we're going to start out with US Bank Corp. Okay? Now, if you look to the right, you're going to see the covered call strike prices. That's what you could potentially make per week. And at the bottom, you're going to see the cash secured put strike prices. Now, you would run the covered call or the wheel strategy with your particular stock. And you would pick strike prices above what you paid for it. Say, for instance, it reaches that strike price and someone's got to buy it from you. But guess what? They're buying it more at a price higher than what you paid for. So you made a profit. Then you jump on the wheel and you sell the cash secured puts. And you pick a strike price that's far beneath what you paid for. So then you're getting 100 shares of that stock at a lesser price, and it goes around and around, i.e. the term wheel. So you just do that strategy over and over, collecting those juicy premiums every week. Okay? Now, you'll still see me searching through FinViz for another stock, because I want to do this with more than one thing. But after we've done the US Bank Corp for an entire year, you're gonna start to accumulate some money, okay? And once you're starting to accumulate money, your goal should be to purchase more stock instead of taking the quick instant gratification. Because once again, this is slow nickel fast dime investing. We're not looking for instant gratification. Okay? The stock market has an uncanny knack of taking money from impatient people and giving it to the individuals that are patient. So what we want to do is we want to run this strategy and be very patient. Look at the money that you can make in year one. If you had 11 people to put in an initial investment, you got your annual dividend, the weekly income, and a total projected cash from year one, over $15,000. Okay? Now, once you've started to make that money, let's just say at the end of year one, you purchase Apple stock. And you're going to do the wheel, you're going to run the wheel with the Apple stock, same as you did with US Bank Corp. This is what you could potentially make after year two. Very tempting, isn't it? Now you got over $23,000 at the end of year two. I recommend, as I've said before, that you go in and you purchase another 100 shares of something else and try to diversify. I selected Johnson & Johnson. Those are the cash secured put prices at the bottom, the cover call strike prices at the top. And you simply run the wheel again with Johnson & Johnson. At the end of year three, you're going to have well over $26,598.36. Then and only then would I recommend starting to take some income from that, especially if you are within a group of people and you all have started some joint venture. Okay? Now, before we go any further, if you have gotten any value out of this video, consider liking, subscribing, and sharing it, and hitting that notification bell. Okay? Now, we're still looking through FinViz because I'm always looking for other stocks that I can run the wheel strategy on. Because here's the thing, you don't have to just run the wheel strategy on those three. Those are just recommendations. In a second, I'm going to pull up the Momo platform. Once again, I just want to remind you of how much money you will make at the end of 3 years. $26,598.36. Pretty tempting. That is the slow nickel, people. Okay, so now we're into the Momo platform. And as you can see, we're just looking at some of the other stocks. This is one of the more popular stocks. Nike, of course. Now, Nike, as we all know, is a very stable company. Great company. It's got an excellent balance sheet. The PE ratio is wonderful. But there are times where I tend to look at what's called a RSI indicator and the MACD indicator. RSI is simply the relative strength index. I just want to know how the stock is trading from time to time. And this can be done with any stock. This stock right here, United Rentals, a lot of people may not know about it, but just think, if the government is going to bring forth some big infrastructure bill, United Rentals, they're going to be in the middle of it. United Rentals, Caterpillar, companies like that. So what you need to do when you're investing in stocks, I recommend that you think on a macro level instead of a micro level. I think that's, that was certainly one of my downfalls when I started investing in the stock market. I always tended to think on a micro level instead of a macro level. Okay? Well, this is nearing the end of our video. I just wanted to hop on real quick and give you some suggestions to hopefully help you out in your future endeavors. Thank you for watching, and consider liking, subscribing, and sharing with other individuals. I'll see you next time.